why you should fade retail traders. Hi, it's Charlie giving you Saturday's video, and I hope you're very well. So, um, I've got some figures here. I'll bring them up in a second of what retail traders were doing yesterday on this mightily big plunge down that we had on the euro. The figures are on the euro, so I'll keep it onto that. But obviously, the pound had a big day down yesterday. If we go to excuse me, if we look at yesterday's big down day there as well. So coming back to the euro, I've got some figures here, and so these figures are pretty much from yesterday, I believe. And so we can see that retail traders were net long yesterday. So as euros was coming down from the day before and then to yesterday, what are retail doing? They're going long. And so this gives us information on a number of different sources, from MyFXbook through to IG Markets, through to Saxo, FXCM's figures, and a few others in here as well, Oanda and the like. So we get an average there. So on average, they'd gone and they'd flipped because previously they'd been at these highs, they'd been short. Fun enough, because the market went up very fast during this period here, and they were net short from over here, and then gradually, they've finally then gone net long down here. So whatever the market is doing, retail traders end up doing the opposite. Now we can look at let's have a look at this euro dollar right now. We can see, well, actually they were going long yesterday, or getting quite considerably during the day, getting long. Well, you could make an argument and say, well, yes, Charlie, but the euros, as we can see, it's bouncing today, and maybe it's going to continue going up, and maybe it does, but that's not my point. They were getting long through the downside push, and all that will happen is if the euro carries on going up here, they will start getting short. So they'll come out of their longs, and then they will start getting short. So please give me some information. Why do retail traders globally, so shorter term traders, we're not talking about investors here, all around the world, on average, and we're not talking about every single trader here, we're talking about an average. So why is it on average that if you get any sort of move in whatever market, so if we picked this move down here, so as soon as a move happens, like this move here, that retail traders on average will be getting net long during periods when markets are going down, and they'll be getting net short, when prices are going up. So they'll be shorting through this period here, like they were shorting through this. They were net short here. Now you could say, yes, Charlie, but the market did come over. Yeah, I know, but they were going net short down here when it started going up. So they were in pain. Some of them bailing out along the way, of course, before it eventually then comes over. So it's not the right policy to do, to just as soon as a market starts going up to start shorting it, and as soon as it starts going down to start buying it. So please give us some comments as to what the reasons why you think, because it's all psychological, why do retail traders do these things? So now I'll tell you one thing. Partly it's psychological, partly it will be technical as well. So you can actually give some technical reasons as to why, because there will be traders all around the world. You've got to bear in mind, there are traders all around the world. They're not all using technical analysis, but they are looking at prices. So there will be reasons why people are buying through here. Eventually the market bounces, and again through here. Down, buying. Of course, at some point the market is going to bounce. So why is it that when we look at these, when there are trends in place, why retail start doing the opposite of the trends? And yet, what do the hedge fund managers do during these periods? They're normally selling, and they're going with it. So why do retail do the opposite? So there's technical reasons. There are technical reasons for that, and there might be, and I can, you can give some reasons why technically, what they might be using technically, but also from a psychological perspective as well. What are they thinking as well? So even if they're not using technical stuff, what is their rationale? Try and put yourself into their shoes as to why they think at that point, right, I'm going to have to buy this market. It's coming down. I want to buy this market. Why are they thinking that way? Anyway, some food for thought for the weekend. Hope you have a nice weekend. I'll see you next week.